Searching for your next side hustle? Well, there's one that could potentially pay big bucks that you can do from just about anywhere. It's stock trading. Now be warned, it isn't for the faint of heart, and it takes a ton of dedication to get it right. But if you're ready to roll up your sleeves and get to work, we've got some secrets to success from one of Canada's most popular trading personalities. You're watching Inside Investing. Hello everyone, welcome to another edition of Inside Investing, the show that helps you level up your financial knowledge and sharpen your investing skills. Presented to you by TD Direct Investing, named Canada's best online brokerage by the Globe and Mail for 3 straight years and counting. I'm your host, Rob Moise. We're excited to have you here, tuning in to Investor Education Month at TD Direct Investing. It's all about helping you turn small steps into big opportunities in your financial life. And of course, a side hustle can be a great step in the right direction, but maybe driving an Uber, tutoring piano, or walking dogs isn't for you. Or maybe if you're like me, the idea of picking up another animal's poop is just a non-starter for you, okay? But in any case, perhaps stock trading could be something that you want to consider instead, and we're going to hear what it takes from a veteran trader who turned it from a part-time passion into a full-time career. Joining us is Shay Huang, founder of The Humble Trader. She's one of the most popular trading influencers on YouTube with nearly 1.5 million subscribers. She's been trading for over a decade, and now she coaches others through her courses and Discord channel. Shay, it's great to have you back with us. Joining us in studio this time. Fantastic to have you. Yeah, you're usually out in Vancouver, so I'm glad that you made the trek to Toronto for us here. Like I said off the top here, you started out as a part-time trader, sort of side hustling with trading as a start here before turning it into a full-time career. What got you set down that path?
Yeah, first of all, thanks for having me, Rob. You guys have like such a beautiful studio. This beats all the YouTube studios I've seen from other YouTubers.
People much more talented and creative than I came up with all of this. I just get to enjoy it here, but yeah.
But again, thanks for having me. I started trading over 10 years ago when I was out of college, and at the time I was living in Los Angeles, and my job didn't exactly pay that well, and it wasn't that stable. I was in film and VFX. So I picked up trading as a way to supplement my income and to help pay rent at the time. I was looking for something part-time, something that I can do at home, and at the time I thought I was gonna get rich quick. So that's how I got into it.
Well, that's certainly what you hear posited out there a lot of times. It's like a get-rich-quick scheme. We're going to hear that it's not quite the case, although it can be quite rewarding too. Escaping the 9-to-5 grind, I'm sure a lot of people can relate to that too. Now, I'm curious, there's a lot of different strategies out there. A lot of people might have heard of day trading. You don't think that's the best strategy for beginners to start with, so clue us in here. What's the best way to get started active trading if it's not day trading?
Full disclosure, for when I first got into it, I did start with day trading, and it was the worst kind, day trading penny stocks. This is 10, 11 years ago. But nowadays, I honestly think swing trading is a better way to go. It's a lot more beginner friendly. It's a lot more lower risk for most traders. And I think it's just a little bit more passive than actual day trading, where you have to sit in front of a screen all day, a lot higher commitment. So I think swing trading is the way to go. It's a lot more forgiving, let's just say that.
Yeah, and fill us in, what's the difference, swing trading, day trading?
So day trading is when you open a trade and close it in the same day. Swing trading is when you hold a position for, let's say, a day or 2 days, even weeks or months. That's called swing trading.
Okay, so you have, like you say, it's more forgiving. You have more time to sort of deal with things on the entry and the exit point of the trade. You don't have to be glued to your monitor the whole time. I'm sure your full-time employer probably wouldn't like that if you're doing this as a side hustle, right?
Yeah, probably not. Yeah, but that's what I did when I first started, and I had to be so sneaky about it, under the desk, going to the toilet and check the stocks on my phone. Yeah, so I'm not saying I condone that, but that's why swing trading, I think it's a better way for most new traders to start.
Okay, good food for thought for people here. Now, of course, there's many side hustles out there, so I'm curious. Let's say you didn't choose to be a swing trader, day trader. What would you have done instead as a side hustle?
And I did do these things, actually, while I was learning to trade. When I was living in LA, I used to flip a lot of secondhand goods. You'll go to a Goodwill in a really nice area, like Beverly Hills, and you can pick up some really nice things, like small furniture, some designer clothing once a while, and I just sell them on Facebook Marketplace, or just sell them on Craigslist. So,
and look at this. I think we actually have a shot of you doing this. AI is an incredible thing, by the way. Look at this natural fit. I'm surprised you didn't stick with this, but I guess it worked out for you in the end here, doing day trading and swing trading instead.
That is me. How'd you know?
We got some more AI fun coming up later in the show here.
Okay.
But let's get into your tips for beginners here who want to get into swing trading as a side hustle. And for those in our audience, if you want to get in on the conversation, we'd love to hear from you as well. We have a live Q&A coming up with Shay later on, so get your questions over to us. If you're watching on Webbroker, you can use the chat box to send your questions to us. If you're watching on our broadcast platform, you can use the questions and comments box. And if you're watching on our YouTube live stream, you can click on the link in the description. It's going to take you over to our broadcast platform, and that's where you can ask your question. Okay, so Shay, we have a whiteboard here and a magnet here for you. We're going to play a little game here, right? There's lots of questions that traders would have, and we're going to go rapid fire to try to get through some of these questions for you here and get your perspective on things. Okay, so we have a scale. It's 1 to 5, and you're going to place that magnet where on the scale you think the answer is most appropriate. We'll do a little reveal for the audience, okay? So first question coming up to us here. On a scale from 1 to 5, how financially attractive can swing trading as a side hustle potentially be?
Oh, definitely 5.
A 5, okay. There we go. Aha, there we go. There's a big reveal. Talk me through that. Why is that?
Well, because you can make a lot of money potentially with day trading and swing trading. But I always want to tell people the expectation is the first 2 years, you're probably not going to make money. When I say 5, I'm talking about year 3, year 4, or even year 5. So that's what I mean. That's why I put it all the way here. It can be extremely rewarding. You can make potentially thousands of dollars, if not more, obviously depending on your starter capital. But first 2 years, you're probably going to be negative, unfortunately.
That's a good little, I guess, cold water to kind of throw on things a little bit because there is so much hype out there. So level setting the expectations. It's almost like this is like a side hustle that's sort of like almost like an entrepreneurial venture that you kind of have to take on, right?
Yeah, like if you compare, swing trading to other side hustles you mentioned, like whether it's driving Uber or walking dogs, those side hustles, you're not going to lose money, right? But with trading, yes, you can start it as a side hustle, but you're not going to make money right away, unfortunately.
Okay, so good thing to know. Second question here for you. On a scale from 1 to 5, how much money does it take to start swing trading as a side hustle? Okay. Let's say 1 is like $1,000 or less, and 5 is like $5,000 or more.
Okay. I would say, let me move this. I usually say around $3,000 to $4,000 to start.
And what makes you say, like, where did that number come from?
I personally started with 2,000 when I first started. I say 3,000 to 4,000 is because it's an amount that, yes, if you lose it, you'll be sad about. Yes, it sucks. But if you lose all of it, it's not going to be detrimental to your financial situation, right? It's not going to put you in debt for the rest of your life. But you also want to trade with an amount that it's still money that's significant, so you're gonna treat it with respect. You're gonna try to trade and try to respect your risk, hopefully, with around $3,000 to $4,000. Risking 1%, which is what I usually recommend. 1% that'll be $30 per trade. Risking $30 to $40 per trade, it's enough to for new traders to get a taste, but not to go too aggressive and like lose their entire bank account.
Yeah, so you do feel like a little bit of pain, but also a little bit of gain. Makes it more real. Yeah.
Because in the beginning, you're just paying market tuition to learn how to trade. Like we said, like in year 1 and 2, you're probably not going to make any money. So that's why you want to risk so small, $30, $40 with a $3,000 or $4,000 account. Okay,
makes sense. Let's keep this train rolling. Third question for you. On a scale from 1 to 5, how much effort might it take to turn swing trading into a profitable side hustle?
So is 1 being very easy?
1 is very easy, 5 is very difficult.
Oh my God. Is it like can we extend all the way to like a 10
We're breaking the scale. We're breaking the scale. Okay.
Yeah, it's extremely difficult. There's a huge learning curve.
Okay, that makes sense. Fourth question then, on a scale from 1 to 5, how steep is that learning curve?
Oh my God. Very steep. I would say, for me personally, I was losing money for the first 2.5 years. It's only after losing money for 2 years and 2.5 years that I start to kind of get a grasp of it. So yeah, extremely difficult. But that's why we go back to the beginning when we said you gotta start with a smaller account and you have to have the right set of expectations. I think if you go into the market, treating it as a get-rich-quick scheme and expect to make money, you're gonna give up really quickly, and most traders do. I think that's where the stat that over 90 or 95% of all traders fail came from, because most people don't even make it past 1 year. But if you can have a longer time horizon and know that, okay, first year, first 2 years, you're just learning how to trade, it'll be really difficult, but you gotta love the game. I think the people who come out after the 2-year mark or 3-year mark are those who can become successful.
Right, and those are probably the folks that it's become an obsession for them, like they're just so into it, right? Okay,
Yeah.
Makes sense. And again, like to your point, the expectation is really what kind of drives things. Because if you were expecting to get rich overnight and you don't, all of a sudden you're looking for another side hustle, right?
Yeah, you know, maybe if you need to make money right away, maybe other side hustles we talked about earlier are the better route to go.
Right, okay. Let's get to our fifth question then. On a scale from 1 to 5, how much money should a beginner be prepared to lose as they learn to swing trade?
Oh my God.
Where on the scale does it land here?
So 1 is 1,000, 5 is $5,000 or more.
Yeah, let's say that.
Honestly, like a 2.5 or 3. I think for someone who's very conservative, if you're trading a $3,000 to $4,000 account, I think it's reasonable that you may eventually drain it down to, about $2,000, like losing half of your account. But again, it's market tuition, right? If you think about it, $2,000 to pay to the stock market to learn isn't that bad. You pay, 5 figures, 6 figures to go to college.
For sure, yeah.
Yeah, so that's the way I see it. Full disclaimer, I lost like $2,000 in my first 6 to 8 months of trading, and I lost $10,000 after 1 year. So you can, if you are a lot more risk averse and you learn risk management earlier, you don't have to lose that much money. But I think you need to go in with the expectation that you may potentially lose 50% of your account in the first year.
Mm-hmm. Now, there are paper trading tools available on a lot of brokers, including TD Active Trader.
Yes.
How long should somebody, do you think, keep those training wheels on before they actually switch to real money?
Yes. Right, that's a really good point. You gotta start with paper trading first. I recommend at least 2 to 3 months of actively trading in paper trading, but you gotta treat it as real money. You can set your paper trading account to the $4,000, let's say, that you're gonna fund, and just trade with that money, just to kind of get the ropes of how to trade, what strategies, whether you're swing trading or day trading, kind of know how to execute orders. You don't wanna learn how to sell or stop out when you're in real money. You wanna learn that in paper trading. But at the same time, you don't want to stay in paper trading for too long. So 2 to 3 months is what I recommend people.
Yeah, and I think that you make a good point too about actually setting the amount of money that you're paper trading with in a realistic way. Don't start trading with $10 million because it's not going to be reflective of your actual experience, right?
No.
Yeah. Okay, we got a sixth question for you here. On a scale from 1 to 5, how confident would you say a beginner needs to be reading stock charts to start swing trading as a side hustle?
To start. I think most people start with 0, right?
0. Breaking the scale the other way now.
Yeah, I know. There's a 0 here somewhere.
I think that's pretty surprising to a lot of people.
Yeah.
I think a lot of people would have the perception that I have to be an expert at reading all these charts and all this data and stuff like that. Why do you say 0?
Yeah, I think I'm a big believer that you cannot learn to trade from reading a book. Right? Maybe investing you could learn how to invest from reading a lot of books with Warren Buffett or different investing strategies. But trading, you cannot. The only way to learn how to trade is to trade, whether that's paper money or small accounts of real money. You gotta get the reps in. That's how you learn and how you start reading the charts, using indicators, seeing trends, you want to start building that. We call it screen time in the market. To see how candlesticks moves if you're trading actively, to see what daily charts look like, what's a breakout, what's a breakdown, what does it look like when the stocks are trending nicely on the daily chart. You want to start building that visual image in your head, and that's how you get better at trading.
Mm-hmm. So this isn't you have to learn by doing, basically. You can't learn in theory alone.
No.
Okay.
Not with trading.
Okay, well, I think that would be pretty heartening to a lot of people. 0 out of 5, and the knowledge you have to start with, that's pretty good, right?
Yeah.
Okay, we got another question. This is the last one for you. On a scale from 1 to 5, how many technical indicators should a swing trader consider? Let's say 1 is just one indicator, 5 being 5 or more indicators.
Yeah, I personally use only 3 indicators.
Only 3?
Only 3, yeah. I use because for swing trading specifically, I'm more of a trend trader. So I use the 8 EMA, the exponential moving average, the 20 EMA, and the 200 SMA. Those 3 are the ones I use. Of course, there's the volume at the bottom of the daily chart that helps, but I predominantly just use 3. Keep it simple. Have you seen that meme with traders where they have like 1,000 different indicators on the screen?
Yeah.
And you can barely see the candlestick chart, like the RSI, the Ichimoku clouds, and like different Bollinger Bands. Yeah, keep it simple.
Keep it simple, because I think a lot of people might think, well, if I have more indicators, that means I have more information, and therefore I can make a better decision. Like, why is that not the case?
Most indicators are lagging indicators, which is fine. Like, a lot of traders use it for confirmation. But when you're looking at 10 or 20 different sources to tell you when to get in a stock, by the time everything confirms, the stock is already at the moon. So that's why I think simpler the better. I keep it at 3 maximum. When I'm day trading, I use even less.
Okay, that's good. So, I mean, at least the screen isn't so cluttered and you don't have like analysis paralysis, right?
Yeah,
with your
exactly.
approach here. Makes sense. Okay, well, thanks for playing along with the whiteboard. We're done with that for now. But
Okay.
yeah, I think the sliding scale is really helpful. Level set some expectations for people, let them know what they got in store for us. We, of course, have a lot more to get to here. But if you are watching the show right now and you're enjoying yourself, having a good time here, make sure you follow TD Direct Investing on our socials. Okay, we're on YouTube, we're on Facebook, we're on Instagram. You can get a sneak peek at upcoming episodes and a ton of other content designed to help build your investing knowledge. And if you haven't already, make sure you check out our Investor Education Month contest here. You can go to td.com/IM for more info. You can scan the QR code. You can see a full list of events. This contest we got, I think you're going to like the prize. Let's hear more about it.
The Investor Education Contest, brought to you by TD Direct Investing, is officially live. Canadians can enter today for a chance to win a check for $7,000 and a 1-hour private educational session with a TD Direct Investing client education instructor. There are 3 ways to enter. Visit the TD Direct Investing Facebook page, click follow, then like the contest, post dated September 10th, 2025. Follow TD Direct Investing on Instagram and like the contest, post dated September 10th, 2025. Or attend a TD Direct Investing Investor Education Month workshop. Learn how to register at td.com/IEM. You can enter once using each method. The contest runs until October 31st, 2025. Scan the QR code for full contest rules and details.
Your shot at a $7,000 prize, that goes a long way towards that market tuition that Shay was talking about, so make sure you check out that content. Fantastic stuff here. Okay, Shay, so you gave us some groundwork here about what swing trading entails. That's great. Now, for someone doing this as a side hustle, obviously they're going to have a full-time job here too. So I'm curious, how much time do you think in a day that a beginner would need to devote to swing trading as their side hustle while still also doing their full-time job?
Yeah, ideally, I would say 2 to 3 hours per day, 3 days a week, minimum. I think especially if you're starting at 0, like we talked about earlier, you want to get as much screen time as possible. And you can really squeeze in time from even during the day, whether it's at break at work, lunch break, before you go to work, and definitely in the evenings after you get back from work. In the first year, it's going to be a grind. You're going to be that person who says no to a lot of social events, but hey, if you want it bad enough, you're going to make it work.
Right. And I think, 2 to 3 hours a day doesn't sound so bad, but then when you have to juggle that with your actual full-time commitment during the day, like that could be tricky. So I'm curious, can you give us a breakdown of what your schedule looked like as you were part-time trading while also doing a full-time job?
Yeah, I gotta let the viewers know I lived in Vancouver, so Pacific West Coast time hours, definitely a lot more forgiving. So I used to wake up at 4:30 a.m. That'll be market time, like 7:30 a.m. And then I'll get ready for pre-market. That's where I did all my research, do my trading plans, read the news, read the charts until market open, which is my time would be 6:30 a.m. And I'll trade from market open all the way to about 8:30 market time. So that'll be all the way till about 11:30 market time. Then I'll go to work. And sometimes I'll go to work late, not intentionally, but just so happens that way. I'm not saying I was the best employee of the month. I don't never won that award. But and I'll work all the way till 7 p.m. my local time. And after I get back from work, I'll still do a lot of research. Catch up on the stuff I missed, save all the charts, the ones I traded, and the ones I didn't. Save the charts. That's how you build your screen time, journal your trades. You want to build a library of all the things that happened that fit your criteria. So you can, even though you didn't actively trade them, you can still learn from those mistakes and kind of plan for tomorrow.
It was great to get the hour-by-hour breakdown, by the way. Appreciate that. I think that helps paint a picture for people. That sounds pretty involved, though. I think a lot of people would look at that and say, grind is certainly the right word. And I'm curious, what sacrifices did you have to make in order to stick to that grind and put the time in that you needed to, upskill yourself and make this profitable?
Yeah, a lot of sacrifices. I was in my early 20s, so I just want people to know that. So it was okay, I thought it was worth it. I would go to bed super late. My local time, I would go to bed on midnight or 12:30 and wake up at 4:30. So you can think about the hours. I didn't have that much social life. After work, I go back home to study the charts. So I rarely went out or had any social activities during the week. Maybe Friday night I'll go party, but that's about it. Weekends, same thing. Weekends are a great day to kind of study more charts, save the charts, journal, and read up on market news. So you kind of sacrifice a lot, I would say. Definitely your social life. Just don't eat out as much. Just watch less TV. I'm sure you can squeeze out some time if you want it bad enough.
Yeah, that's the thing. It sounds like you really have to want it badly enough. Although I have to say, that would be really tough, I think, for some people seeing like their friends out having a good time, or family get-togethers and stuff like that, whatever it may be. How did you keep your eye on the prize? Like, was there some specific goal that helped you say, no, this is going to be worth it for me? How did you keep yourself motivated?
I think I was just more obsessed with the game and what the potential of trading can provide for me in the future than I didn't really care about that much for like the present day, what I have, and all the different activities that was happening. Maybe I missed a lot of birthdays, definitely. But at the end of the day, I think it's all worth it down the road. But at the time, it definitely wasn't fun. People are partying, posting on Facebook, and I wasn't there. Just you gotta stick with what you actually want, right?
Do you think somebody could, take the edge off of the commitment a little bit, maybe not go quite as hard as you did, and still be able to find success over time?
Maybe. But it might take them longer. For me, I think it took me long enough. It took me 2.5 years of losing money to go red to green. I think you could get there, potentially put in less hours, but I wouldn't know what that's like though, Yeah, but I would say, I don't think you can start this side hustle by actually only treating it part-time, only doing, 1 hour a week. I don't think that's gonna work out at all. So I say 2 to 3 days minimum. To look at the market and to journal and look at what's going on.
Right.
You need to keep a pulse on what's going on in the market. Even if you don't have the time to trade, you need to know the themes, the trends, all the hot stocks that's going on, and that's how you build that experience in the market. Without it, if you're just casually looking at the stocks and looking at the news on your phone, once or twice a day, that's not gonna build you real experience for trading.
Mm-hmm. Yeah, you're going in cold like every time you pick up the phone or you hop on the trading platform. Yeah, appreciate that. You mentioned journaling, and one of my favorite quotes is that you can't improve what you don't measure.
Exactly.
And this is where the trading journal comes in. I've heard a lot of other traders talk about this. What are the criteria that go into a good trading journal? What are the things that you're tracking that are most impactful?
Yes, you want to track your strategies, not just the win rates, even though that's what most people track. You want to track how much money you make when you win and how much money you lose when you lose money, when the trade doesn't work out. So that's how you measure the risk reward for the strategies. You want to track that, and then that's how you know which strategies to focus on. Let's say you start with 10, you want to pick the top 2 to focus on and only trade those. Other things is time of day of the trades, how long you're holding the winners versus the losers, because there's a lot of stats there that you can improve on. When I did that, I found out that I was holding on to my losers way too long and my winners for like 2 minutes. So if you just reverse that, you're gonna see a lot of success with a lot of your trading and improve it over time. And also, I also track the type of stocks that I was trading, the market cap, the float, the volume. I track all of those, and that's how you narrow down your stock selection. So you start trading the best stocks that fit your trading style and your strategies. Other things, like time of day, we talked about, and seasonalities. some strategies will work best in summer months, and some will work the best in the winter months. And same thing for different kind of stocks, small caps, large caps, or mega caps. So those are all the things I used to track. I used to have like a crazy spreadsheet. Yeah, there wasn't that much automation back then, but nowadays it's really easy to automate a lot of these.
Well, speaking of automation, and maybe this question's a little bit out of left field, but AI is obviously top of mind for everybody. Have you ever used AI, or do you think somebody could use AI to sort of like analyze their trading journal and like maybe spot some trends that they didn't pick up on or anything like that?
Yes, for analyzing your journal. But again, that requires your manual input in the first place. Then there's actually a lot of softwares out there that can help you do that. But what AI is not good for yet, I think that will change, is to help you find the setups. There's a couple different softwares that claim they can do that. I tried it. I didn't really like the stocks that they were picking for me. So at the end of the day, I pick my own stocks, I trade my own trades, and I use AI to analyze some of those results after I've traded them.
Interesting. So again, it's like what we hear teachers say, like kids like don't use AI as like a cheat code basically to try to do things. It's like a supplement, right? That's how we have to approach this. Okay, makes sense. One last one here before we get to a little bit of fun here. What sort of habits do you think could help somebody not blow up their account in those early days? Like, I could see people being terrified, like, okay, I just took the paper trading wheels off. I've got my few thousand in the market. I don't want to lose it all like so fast. What can they do?
So I think, patience is really a virtue, and it works well in trading. You want to have if you have the personality in which you can kind of have a longer time horizon and look at, what we talked about earlier. I was aiming to become successful in a couple of years instead of right away. If you have that longer time horizon, and if you can really treat trading as a business, you're kind of paying the market tuition, you're learning a new, business journey, then I think those are the kind of people who can eventually make it. So definitely be very patient. And you want to be very disciplined. So if you have, I'm one of those people who love my daily routines, and I like to stick with those. Like I go do certain things at different time of the day, and I stick with that for the entire week. If you're a very routine-based person, I think trading will work well for you as well. You don't, trading doesn't work that well for people who are too spontaneous, or like you do different things every day. You wanna be a trader who sticks with a set of strategies and a set of discipline. So that helps as well. And also, having good emotional control, which I didn't have when I was in my early 20s. So that helps a lot. So you are not gonna be trading emotionally.
Okay, great practical tips there. And speaking of emotional volatility, let's say, I have some more AI fun for you here, okay? Because obviously, a trade goes bad, trader needs to vent some frustration. I'm sure you vented some frustration. So we're gonna bring back our little AI images here, and I'm gonna show you a series of images, and you're gonna tell me which would you prefer to smash to pieces to vent your frustration, okay?
Okay.
All right, so let's call up our first image here. This is you going to town on a keyboard. Look at those keyboard pieces flying out there. That looks awfully satisfying. You got a little bit of a Hulkamania thing going on there too. That sounds pretty cool. Okay, what's our next one? Or the monitor. Okay, you go Super Saiyan punch on the monitor. Nice shatter, very good strength that you have behind that. Which would you prefer between those two?
Probably the keyboard.
Keyboard.
Yeah, and fun fact, I actually used to do that. You can buy those super cheap keyboards for like $2 on Alibaba at the time. So I had a couple of those, and they're really fun to break because of the small pieces. Monitors, it gets a little bit too expensive.
Right. Okay, that makes perfect sense. Okay, so let's see what our next one is here, our next series of images. Okay,
oh my God.
Punching through a wall. Look at you. I mean, and that's a really clean punch too. You got a lot of force behind that. So that's pretty good. Okay, what's our next one? Aha, mirror. Smashing a mirror against the floor here. I don't know what kind of pose that is you're rocking there, but it looks like a good way to vent frustration. Mirror or wall, what are you taking?
I would pick wall over the mirror, just because in Chinese culture it's bad luck to break your mirrors. So I wouldn't want that. So I'd rather anger my landlord than to break a mirror.
Okay,
Yeah.
I feel like too, with all the shattered pieces, you probably end up hurting yourself or something like that too, and then you're angry again, and you haven't even vented the frustration.
Yes.
Although I will say, if you punch through a wall, if your drywalling skills are anything like mine, that wall is never going to look the same. Okay?
What's a drywall?
The drywall.
I don't even know what that is.
The wall that you punch through. There you go. Yeah, there you go. Okay, let's get to our last series of images here. What do we have on tap? I think we got ceramic plate. Okay, ceramic plate. This is classic. This is a little bit of an unorthodox approach to smashing a plate that we have here in this photo, but I mean, hey, that's cool. That's cool. What's our next one? stuffed. What did this animal do to you?
Oh my God.
You're ripping it to shreds. It's got all of its guts spewed out all over the place. What are you taking, ceramic plate or stuffed animal?
Oh my God, these AI images are,
It's scary,
are pretty scary. Yeah, it's showing a side of me that I never knew I had. Probably the stuffed animal.
Stuffed animal,
honest.
yeah?
Yeah.
Be honest, do you have like a graveyard of ripped apart stuffed animals like in a closet somewhere in your house?
How'd you know? No, but mostly because of the plates. My mom would get mad at me if I did that to her plates.
Yeah.
So, yeah.
I feel like the cleanup factor is also like a lot easier too with the stuffed animals. Okay, well, we appreciate you playing along with that one. We talked about earlier, you know, how you like to set up trades and stuff like that. Let's talk through an example, okay? We're going to call up an example on screen here. This is an example that you shared with us of a trade, and yeah, you can reference your page there as well. Let's see this trade up on screen here. This is a case study trade on the stock Robinhood. Talk us through what we're looking at here. What is this trade, and why did you want to place this one?
So I'm gonna look at my notes here. So this is a swing trade I did back in June of this year. So if you look at the chart, around June, when Robinhood was breaking through all-time highs. Yeah, there you go. Breaking through all-time highs. So this is where the three indicators I talked about earlier come into play. The 8 EMA, which is the orange line you see, the deep blue line, which is a 20 EMA, and then I guess in the corner is the purple line, that's a 200 SMA. So when I pick these kind of stocks to join what I call the trend join long strategy, essentially I want to pick stocks that's breaking out through all-time highs, or has to be at these multi-month highs with a really positive catalyst. So at the time, Robinhood, the company just had smashed through their earnings. They were guiding with upside guidance, and they're talking about tokenizing a lot of private equity shares. So that's exciting on top of crypto. So that's why I joined that, and I like to pick a stock that's riding along the 8 EMA. So you can see on the chart, it's riding above that orange line right there. And I like it when you see these daily candlesticks, it's slowly trending up higher. I don't like it when the stock gets extended and break out really aggressively for multiple days. I like these slow trending up stocks. So that's where I would join the stock. And also it's breaking through that yellow line, which horizontal line, that's the all-time highs. So stocks that break through all-time highs, generally, for large cap stocks, they tend to go higher. So that's why you don't want to fight the trend. So I joined at all-time highs, and that's buying at the peak, and the stock just keeps on, you can see, trending up higher in the next 2-3 months. When I got out, my first exit was exit 1 over there, yeah. So sell into what I call the 8 EMA extensions is when these stocks that break out, they pull away from the orange and the blue line, the 8 EMA and the 20 EMA. Those are the extensions where I'll get out. So I guess that's around like 110. I want to get out when there's a huge gap underneath. And then final stop, I use either the 8 EMA or the 20 EMA as the stop. I'll use the 20 EMA if I want to give it a little bit more room. It looks like the stock has a lot more room to go. But if it closes below the 20 EMA that you can see on the chart, the blue line there, that's when I get out. So that's a decent, I don't know the percentage, but around $66 all the way to 110. Final stop is about 100. It's not bad for a swing trade that lasted only about 2 months.
2 months, okay, yeah. And along that way, are you like monitoring it every day kind of thing? Are you just like putting it in there, you're forgetting about it for a little bit and you come back to it? Like what did the workflow look like for you?
So just because I still like trading a lot and I still day trade on the side, it's inevitable I kind of see how the stock is doing daily on the daily chart, but I don't really go in or adjust anything. I don't really look at the intraday chart for the swing trades I'm in. I look at only the daily chart, which is why I think it's a lot more forgiving for people. Like when you're using a daily chart, you don't need super accurate entry like you do when day trading. And same thing for the exit, right? You can use the daily candles as a way to get in and get out. So that's why I think swing trading is for most people. So yeah, I wasn't actively doing anything else with the stock after I got in the swing trade.
Okay, makes sense. That was a great example to kind of spell out for us kind of the thought process along the way and everything like that. Of course, we can't pack an entire education on how to do swing trading specifically in one show here. Sorry, guys. But if you want to learn more about that, you're in the audience and you're intrigued by this, obviously Shay has a lot of this content on her channel. And also we have a ton of workshops in Investor Education Month and just in general here at TD Direct Investing that can help you wrap your head around all of this stuff. So make sure you check that out. Remember, td.com/IEM is where you can see a full list of events, find some workshops that appeal to you on the active trading side. Shay, really appreciate you walking us through that example, sharing some of these tips for us. This was great stuff. Before we get to our Q&A, because we have that coming up in just a few minutes here, I want to bring in my colleague, Caitlin Cormier, okay? Because she's standing by, ready to show our viewers who might be intrigued about doing this as a side hustle, how they can do it on the TD Active Trader platform. Caitlin, welcome to the program. Always great to have you here. You're going to show us the ropes here. Yeah, exactly. So, I mean, like we said earlier, newbies might not want to be putting all real money on the table right off the bat here. That can be pretty nerve-wracking. How can they paper trade in TD Active Trader? Show it how it's done.
Yeah, absolutely. So we want to start in the kiddie pool. That completely makes sense. So the great news is that we do have TD Active Trader with, as you said, a demo account. So let's go ahead and hop in and take a peek at what the platform looks like. So this is kind of a quick look at a little bit about what this platform looks like. I've created my own workspace here so I can put into this, whatever it is that I'd like to see. So in this case, I have my positions, I've got a watch list, I've got a chart. So it's pretty, it's very kind of customizable. There are some pre-created screens as well that I can click through to get additional information. It does have, like we said, that paper trading idea. So there is money in this account and you can place trades. So let's just say, for example, you've done some research and you had a stock that you wanted to go ahead and purchase. You can simply click on the ask price. It's going to bring up an order ticket for you. Of course, you can go through and customize the order, the type of order that you'd like, whether you want to lock in a limit price. When you're comfortable with that, you go ahead and click confirm and send practice trade, and boom, your order is placed and filled. And then on the left-hand side here, you'll see in my positions, that position has actually been added to my holding. So it literally is a full kind of demo account where you can use that fake money in order to try out these different trades and see how they work out for you.
That's really great. Made it look really quick and easy here for us. Let's say, like as Shay was saying, that she wants to use a few technical indicators to kind of spot these trades. How could they do that in Active Trader? Can you just show us maybe an example or two?
Yeah, absolutely. So on the workspace that I have here, I do actually have a chart available. And you'll notice, like, for example, if I click on a security, it's going to update to whichever security I see here. I'm just going to go ahead and maximize my chart so it takes over my whole screen so we can really see this feature. And if I want to add any sort of indicators, I'm just going to come up here to this kind of fancy looking F. And when I click on there, it's going to show me there's over 100 different indicators. I'm going very fast through here. I know you certainly can't see what it shows, but there are so many indicators available that you can add to your chart. So depending on kind of what's important to you, I know that exponential moving average was one that we just talked about. So I went ahead and typed in exponential. We can see that is available here. I just simply drag and drop it on the right. And then for time days, I think time frames, I know we said 20 days. So for example, if I wanted to do that, I just add that. If I wanted to do another, I can simply drag and drop that, and I can change the time frame on that one, if it's 8 or whatever length of time we'd like. And then once we're ready, and of course you can change the colors and stuff like that to make it easier to read. But once you're ready, you just simply click close, and it's going to have those two moving averages show up on the chart. Now you can see here that it is a little bit difficult to tell the difference between the two. So then again, I just come back here. Let's just choose a brighter color. For the 8-day, click close, and then now you can kind of clearly see that there's a difference between those two lines. So again, any other studies that you want to add, just simply click through, type in the name of the study you want to add, and then it can add directly to your chart within the Active Trader platform.
And look at that, like our chart's already looking a lot like Shay's there. So fantastic stuff, Caitlin. Appreciate you showing us the ropes. Again, many workshops that people can check out if they want to learn more about this stuff. So make sure you check it out. Caitlin, thanks for joining the show as always. That was Caitlin Cormier, our Senior Client Education Instructor at TD Direct Investing. Okay, without further ado, we got tons of questions coming in for you, Shay. Do you want to hear what our people in the audience want to know more about?
Let's hear it.
All right, let's get to it. I think Brian is our first question here. Okay. And Brian's got a quick and easy one here for you. Do you trade options?
Not a whole lot.
No? And why is that? I
actually dabbled in options in my year 2. And it was just a lot. I was scalping options. It was a lot. I just never got into it. I kind of lost a lot of money faster than I did trading the underlying stock. So that's why I never just just never got into it. I didn't want to have to deal with the Greeks and deal with the premiums. And remember, I was day trading at the time. So I think swing trading options are potentially something that's suitable for some people with a smaller account. But day trading, I don't think that's a good way to start.
Right. Okay. And would you say like someone just starting out, like maybe doing this as a side hustle, should they, wait until they, have some confidence just doing it kind of straight up before they get into options? Like, does that add another wrinkle to it that they maybe want to hold off on immediately?
I always recommend people to start with trading the underlying first. Once you kind of got a handle of that, then if you want, look into options trading.
Okay.
But start with the underlying because you don't want to have to deal with the Greeks right away.
Yeah, lots of factors with options, and things can move very quickly, to your point, right? So take it slow and steady as much as you can. Anthony's got a question for us. Let's see what Anthony's got in store for us. Anthony's asking, is it sensible to set up a stop loss on every trade, or should you let the position breathe?
I think you can let the position breathe and still have a stop. It just means you have a wider stop. I think if you're even with trades that's like a swing trade that needs a lot more room on the daily to breathe, I still have a stop in mind going into it. It's just a lot wider. So you should have a stop for every single trade, but you want to place that stop at a sensible place where the thesis no longer makes sense. So quick example, if I'm, for example, the Robinhood trade, if the stock breaks down underneath the previous all-time highs level, that's my stop. And I think the stop would have been around like $6 to $8 per share. It's a lot wider with swing trading, but that's just a potential risk there. To risk around $6 to make, $40, is that worth it? I think that's worth it.
Right, and the idea is that you don't want to put the stop like way too close because then you're just going to blow out the trade before it even has a chance to recover necessarily if it had a little dip, right?
Yeah, exactly.
Okay.
Especially with swing trading, you need wider stops.
Okay, that's great food for thought for people to consider. Let's get to our next question here. I believe this is from Arafath. They want to know, when you say save the chart, what exactly do you mean?
Yeah, so what I used to do, and I still do, is I have the daily chart. So I have two time frames, daily chart and intraday, if I'm day trading. If you're swing trading, just save the daily chart. When I say save the chart, I just mean screenshot the chart, I'll name it the date, the stock ticker, and the strategy. That's how you build a library. And I'll save those charts in each designated folders for the strategy. So let's say it's a day trading strategy for breakouts, for example. That folder, all the charts are the breakouts. If it's a swing trade, that's a daily reversal. That's one of my other strategies. Then I'll save a chart for all of that. So you have this visual library of what a strategy of yours should look like. That's what I mean by saving the chart. Save the charts you traded, also the trades that you missed.
And how often do you find that you go back and you reference these charts that you've saved?
Oh, all the time, every day. Yeah, so when I was trading part-time, that's what we talked about earlier. In the evenings, spend 2 to 3 hours, if you can, to prepare for the next day and review the trades. That's what I mean by reviewing the past trades. You're comparing today's chart with previous days or previous weeks, and you use that information to get like a visual sense of what could potentially happen the next day. And that's how you plan for the trades next day or next week. So it's a lot of referencing historical data. To use that to make educated decisions for your trades going forward.
Right, makes sense. Okay, wonderful stuff. Michael's got a question for us. What does Michael want to know? Michael's saying, what are 3 rules you never break when swing trading? Good question, Michael. What do you got for us, Shay?
That's a good question. The number one is definitely give it a lot more room to breathe, which is what we talked about. I don't want to set my stops like 50 cents. This is a swing trade, right? You need to give it, $2, $3, or potentially $8 per share, depending on the stock and the volatility. So that's number one. And number two, it gets really similar to day trading. Always respect the stop. So if Robinhood broke down below the previous all-time highs, there's no, oh, maybe it can come back, or maybe, give it 2 more days. No, if it closes below my stop or below some of the EMAs we talked about, I have to get out. So that's number 2. And number 3, I think, especially with swing trading, since it's swing trading, you're not gonna get into a new trade every day. I think the most I've had is 10 swing trades in 1 month that I've started. But there are months where I don't have a single swing trade going on. So earlier this year, during the whole tariff concerns, I didn't have a single new swing trade for the months of like March and April. It's only near the end of May that I started getting into new swing trades. So, with swing trading, you're not gonna place, new trades every day, and that's the name of the game. Less is more in swing trading.
Right, like don't force suboptimal trades just because you feel this need to put money at play, right?
Yeah, I know a lot of traders, they wanna be in positions all the time. They wanna pick up their phone and there's always positions that they're in. I get that. I get that feeling too. I feel like my money isn't doing anything when I'm not in a swing trade, but it's better to sit out and wait for the best setups.
Less is more, words of wisdom. Appreciate that. Let's get to our next question here. Ali's got a question. When does it stop being a side hustle? That's a good question
That's
too.
a good question. Yeah. I think it stops being just a side hustle once you see some result and you start funding that small account. I would say if you're trading a $5,000 account, that's a side hustle. But if you're able to start seeing some results consistently, that's time to start funding it with more capital from your employment income, right? This is a side hustle, but now you're funding more money. That's how I kind of start doing that. After year 2.5, I start funding my account to be bigger, but I'm still trading the same way, but I'm just sizing up a lot more. I think by the time you start sizing up, I would say at the time I funded my account with $20,000, then that's real money. Like I don't want to blow the entire $20,000, but that's also, it's no longer a side hustle anymore. You can make some real money with $20,000.
Mm-hmm. How did you find the transition from part-time side hustle trading to, okay, this is going to be my full-time thing now? What did that process look like? Was it just cold turkey one day, you march into your boss's office and say, I'm out of here? Or how did it go?
I wish. It wasn't that dramatic, I don't think. But I started planning for it around 6 months before I actually quit. What I did is I looked at how much money I need to live in a year. At the time, I was pretty frugal. I needed $20,000, $25,000 to give it some buffer room to pay rents to live. So I need to have made $20,000 from trading. Then I take the money and put it outside of my trading account, put it into a bank account. So I know if I fail, with trading, I make $0 for my first year. I still have money to live on. So, I would say at least save up 1 year's worth of living expenses outside of your trading account. And for me, that took about 6 to 8 months. That's when I know that, hey, once I have that money outside of my trading account, then I'm ready to quit.
Right, that's the buffer that you have in case. You don't want to have to tuck your tail between your legs and march back to your boss's office and say, hey, remember when I said I was quitting? That was a joke, right?
But I actually did, my jobs were all contract based. So it's not like I have the same boss to go back to. But I did go back to take a couple more contract jobs during my first year and second year full time, just to make things a little bit easier, not to be too stressful. But I did do that twice.
Mm-hmm. Okay. Yeah. I think we have time for one more question. Let's see what we have on tap here. We have Daniel asking a question. What's your recommendation for filing capital gains taxes after a successful year of trading? Is it best to set up an LLC?
So full disclosure, I'm not a tax professional, so I can only tell you what I know, but you need to talk to a real tax professional and financial advisor potentially about this, because everyone's situation is different. He said after 1 full year of successful trading, but how much money are we talking about? Are we talking about $1,000 or are we talking about 100 grand? So in my opinion, at least here where I lived in BC, I only started setting up kind of like a corporate account for my trading after I hit 100K. So anything before that, I don't think it's worth it to do so. But again, check with your actual local tax professionals about that.
Totally. Okay, well, so obviously Daniel's has big plans for his side hustle
here. That's good, yeah.
So that's good. Good stuff, Daniel. Appreciate you fielding all these questions from our audience, Shay. Really great stuff here. Thank you for coming in, too. It was wonderful to chat with you in person, especially, and have you give us the lay of the land on swing trading as a side hustle. Appreciate it.
Thanks for having me. Yeah, in person definitely feels different. I love the studio, and I hope we can do this again next year.
Absolutely. We will. So anyway, thanks again for coming in, and to our audience, of course, thank you for tuning in. We love having you here. Make sure you check out next week's episode. We have DIY investors Stefan Den explaining why building $1 million portfolio is not nearly as hard as you might think. In fact, all you need to get started is the change in your pocket. How can that be, you ask? Well, you're gonna have to tune in to find out, okay? Make sure you check it out. It's gonna be a great episode. That's a wrap for this edition of Inside Investing. From everyone on the crew here, thank you so much for watching. We'll see you all next time.
Have more questions? Check out the links to the right and in the description below.